Welcome back to the Dividend Diplomats YouTube channel, my family. We got Bert and Lanny here. Guys, another dividend stock video. Stock market is going a little crazy right now. Earnings releases are showing a dismal outlook. Stock prices are coming down. So that means the dividend diplomats are finding some dividend aristocrats to buy right now.
Before we talk about those aristocrats to buy now, smash that subscribe button. Give this video a thumbs up. Help your boys out. We are on the verge of crossing 18,000 subscribers. So freaking close. Hopefully, by the time you're watching this, we're there. If not, help us get there. We would appreciate it. And also, stop by the swag store before the holiday season. We got some stocking stuffers here for your boys. You got your Dividend Diplomats coffee mugs. Laney's rocking that sweatshirt. Help your boys out. We appreciate it. But really, let's all get to financial freedom together.
All right, guys, we're recording this video here on October 28th. Stock market just had a very interesting week indeed. The last 5 days, the market has been down by 2.21% or another. We'll round up. We'll call it 100 points off the S&P 500 here. Because, Bert, what are a lot of these earnings saying? Like, what are you seeing? What are you hearing from managements right now?
Yeah, so I think that's a great way to split this up here. Earnings, you're seeing solid earnings for companies. A lot of companies are reporting sales growth. They're reporting earnings growth. When you look at the numbers, you're like, it doesn't make sense that the stock's coming down. But you hit it on the head. It's what are you hearing from the companies? And what you're hearing from the companies are we're starting to see cracks. We're starting to see signs of a slowdown. We're starting to lower our guidance. Prepare for future quarters and future years of slow growth as a result of the slowing down economy. And that's what's sending these stocks down.
Now, we always have to keep in mind, guys, because management's job is typically to underpromise and to outperform. So that if they have a window to set an expectation lower, they're going to do that. So there's a lot of psychology in the game of management and the game of expectations. Now they're not. Yeah, go ahead, Bert.
I was say, isn't that nickname the Jamie Dimon? He's masterful at it. He always gets ahead and takes the big hits in the great quarters to set up strong numbers when things are slower. He's very, very good and one of the best.
He's very good, and we've seen a lot of people take note, obviously, guys, because yeah, like I said, if there's a window to set it, they're going to do it. And hey, what great time to do it. Maybe management wants to do a little inside buying. Maybe the company wants to buy back some stock. Let's set that expectations. Yeah, again,
Yeah.
hey, pure spec. Whoa. But guys,
if it's not in the blackout period, it's not illegal. It's not in the blackout period, it's not illegal.
That's right. Now, we've seen some dividend aristocrats really hit some juicy numbers here. And I felt like, the diplomats felt like we had to talk about these 4 stocks right now. 4 stocks that are, yielding well above their 5-year averages, some even over 5.5%, others over 2 thresholds of 3%, 4% that we haven't seen. And another one is approaching 3%. All 4 stocks we're here to run through quickly are all down almost 20% plus. The worst one's down about 29% this year.
We love it. And we're so focused on aristocrats because a dividend aristocrat's a company that's increased its dividend for 25 consecutive years. So they've proven their ability to manage their cash flows, manage their earnings well enough so that they can continue increasing the payout to shareholders during previous bad economic cycles. So when times are getting tough, you want to focus on the companies that have shown their ability to do it before.
Guys, and when times get tough, this is when dividend investors shine the brightest, guys. It's going to be hard to stay consistent. It's going to be hard to buy when you see red. But guys, that's when you probably should be buying. Again, we're not here, not professional advice, full disclaimer. No. But, when others are running out, that's when typically, it's a good time to run in. And you might not see results in a year, 2 years, but you might see them in 5, 10, 15 years. Like Bert has, like I have, over the time period that we've been investing.
Yeah, so let's run these companies through the screener, show the metric. Quick update, our screener, PE ratio less than the S&P 500's metric 1. Metric 2 is payout ratio less than 60%. Metric 3 is history of increasing dividends. We didn't go back to metric 1 there, Lanny. And that fourth metric, the bonus one we always throw after the first three, is the dividend yield. You want to kick us off here, Lanny? What is the first dividend aristocrat that's getting crushed now?
Yeah, let's kick it off, guys. We're talking about good old reliable, the dividend king themselves, Johnson and Johnson. Ticker symbol is J&J, guys. I know a lot of people had their sights set at $150 a share, especially post split off of Kenvue stock. I know there's still a lot of concerns with the legal battles going on over there at J&J with the talc powder. Um, you know, still has a little bit of that cloud hanging over them, but guys, they're not only did they break to 150, but they broke through the floor of 150. They're at $145.60. So they are down 18%. So it was really nice seeing them. In fact, guys, I'm telling you right now, I bought a share on October 27th. I bought a share of J&J while I was at the airport. And that's when I messaged Bert, what the F is going on right now in the stock market?
Yeah.
And he helped send out some tweets too, because, there's a pretty good spam filter process with the internet out where I was.
Yeah.
But yeah, J&J, $145.60. Bro, I know you guys over a couple hundred shares too between you and your wife.
We do, and we're in a little bit of an unrealized loss, but again, because of this, we're looking to start buying them again and continue growing. We didn't stop at 100. We just paused. We might do it. We might consolidate some positions, put more into Johnson & Johnson. A lot is on the table here. So let's look at the metrics. You said it's 145.60. Forward earnings are 952. That's a PE ratio of 15.29. It's nuts that the PE ratio is closing in on 15x, Lanny. Absolutely wild.
Closing in on 15x. Historically, this last probably 12 plus months, 12 to 18 months, they've been between, I don't know what, Bert, 16 to 19 times earnings. So it's nice seeing a little bit of compression now, getting close to that 15. Let's dive into that dividend payout ratio, because this is typically where J&J shines, paying $4.76 per year, or if you break it down, $1.19 per share per quarter, a 50% payout ratio, smack dead,
Perfect.
right in that perfect payout ratio spot.
Can't say anything more about that. Now let's look at the dividend growth. Their 5-year dividend growth rate is 5.92%. They're a dividend king. Put that crown on right here, Lanny. They've increased that dividend for 60 plus consecutive years. That's why Johnson & Johnson's one of our foundation stocks and one of our best stocks for your portfolio.
Wow.
Yeah.
Yep, that's a long time, guys. 3.27% yield now, a 3.27% yield.
Jeez.
That's, again, they broke above that 3%. They broke above 3.25% even. So they're about 50 basis points now higher. When we say 50 basis points, we mean 0.5%, so 0.50% higher than the 5-year 60-month average, which is 2.78%.
Beautiful. And again, they're down 18% year to date, down almost 17% over the last year. That's why Johnson & Johnson has popped up on this list as a beaten down dividend aristocrat plus, or they're the dividend king. To summarize, 15 PE, perfect payout ratio 50%, nearly 6% 5-year growth rate, increase for 60 years, and a yield over 3.25% at 3.27. That's Johnson & Johnson.
There it is, guys. Diving into that dividend aristocrat. Oh, dividend king, number 2 on today's list, on today's stocks to possibly buy, stocks to keep watching, not just stocks, but dividend aristocrats, guys. We're talking Target, the bullseye, TGT, trading at $107.23, down almost 30% this year, down 36% since the end of October last year, Bert. Man, what a beat up dividend king right now. Retail has just taken the glutton of punishment, especially Target, with the theft that is happening at their stores, plus just the fear and loom and doom of the consumer and the debt on balance sheets here.
Yeah, you summarized it perfectly. So let's see just how beaten down they are. Their price is 107.23. Earnings per share is 757. That's a PE ratio of 14.17x. Pretty beaten down if you ask me.
Yeah, wow. And if we look at that dividend, payout ratio for Target, guys, paying $1.10 per share per year. Actually, Bert, let's fact check that. I just want to be sure it is $1.10. I go over to, let's do a quick check. Yep, it is $1.10.
All right,
Um,
we have fact check to give it the big check mark at the top of the screen there. We're good to go. So what's that payout ratio looking like now, Lanny?
right now, 58%. So in that perfect payout ratio range, still obviously hitting closer to that 60% ceiling. But hey, still
Right?
safe, still have room to pay and slightly increase it. I don't expect dividend growth to be big. Bert, take it to that
Yeah.
next metric.
Excellent segue because we're going to talk about dividend growth. Their 5-year dividend growth rate is 12.04%. They've increased for 51 years, but I very, very much echo Lanny's sentiment there. There is no chance in 2024 that they're going to announce anything close to the average. I'd expect 5% or less from Target going forward until they start to turn things around.
Yeah. But hey, whoever's owned Target over the last handful of years has definitely loved the massive dividend increases that they've been doing previously. The last one obviously was very small.
It shows when
Um,
things are better, they
yep,
are willing to reward shareholders. So that's a sign of why you buy them when they're beaten down to get into that future state when their things are a lot better.
exactly, which kind of reminds us when we were buying Target, kind of, back in
First
the
time.
day.
Yeah.
So it's very similar right now. But the dividend yield now is swelled up to 4.1%. So they broke the 4%
Right.
ceiling, and they are trumping their 5 year again. I always say 60 months when you go back through that period of time. That average yield that Target had during that period is 2.3%. So they're almost 2 full% higher
Yeah.
here.
So let's summarize their metrics. 14 PE, 58% payout ratio, 12% dividend growth rate. Increase that dividend for 51 years. Yield over 4% with a 4.1% dividend yield. That is Target, Landy, who is number 3 on this beaten down list.
Okay, guys, Dividend Aristocrat right now, number 3 that you should and could consider buying. We're throwing it out to TROW, TROW, T Rowe Price. Guys, another asset management firm that when the markets are shaky, when fixed income slash treasury rates remain high, you may see outflows within the asset management firm, and that's been the big tagline for T Rowe Price, down 19% this year, down 19% since last year.
Yeah, that's what I was trying to demonstrate very portly with my hand. Out of equities into fixed income and treasuries, because that's where people are flocking right now into that safety. I still don't think I nailed it with the hand motions. I'll have to work on that, everybody. All right. And that's what it is. And like you said, you were buying Johnson & Johnson on Friday the 27th. I was buying T Rowe for my wife. We were building that position. We scooped up 3 shares under 90.
Oh,
To me, it's just a great stock. It's one of my favorite buys right now. So I am pumped up and juiced up that it made it onto this list.
Bert, I happened and got lucky to grab a share below, I believe below 89 on Friday as well. I
Yeah.
was just going hammer on the keys at the airport.
Sweet. We love it. All right. Well, let's look at their metrics there. They're 88.39. Earnings per share 7.13. PE ratio is 12.4x. Whew. Sweet for T Rowe
12,
Price.
12.4x, probably at I would say a good valuation right now. Yeah, but let's look at the dividend right now, payout ratio, $1.22 per share per quarter. Similar to Target, they had a very low increase this year, which makes sense because a lot of their business is heavily dependent on, assets under management and price appreciation, right? So they perform well when the market does well. But $4.88 annual dividend, guys, taking that over that EPS, we're talking at a 68% dividend payout ratio. So we talked a lot about T Rowe. Bert's talked about T Rowe. We're talking about T Rowe today. Obviously, that's a higher payout ratio that we'd like to see. They have a very good balance sheet, which we always echo. But we also don't expect high numbers on the dividend growth for the next year or two.
Yeah, I think it's a very fair assessment with them. So obviously, we're going to keep an eye on the payout ratio. If it keeps creeping towards 100%, we're going to have a different answer. But right now, it's just something to monitor, keep an eye on, keep focusing on those quarterly earnings releases and 10Qs as they continue rolling out. What about their dividend growth, Lanny? How are they looking here?
Well, dividend growth, guys. 36 years of growing
Yeah,
dividends.
yeah, they are an aristocrat, and the dividend growth rate has been strong. Again, probably won't be going forward, but the 5-year dividend growth rate has been nearly 21%.
Yeah. Now keep in mind the last increase was just under 2% at 1.67. So we probably will see something along those lines. We would expect in 2024. But Bert, what's that yield done now since they're down 19%? Why?
Yeah, that
This
is
is now a high flying aristocrat.
yeah, it is swollen up to not 1%, not 2%, not 3%, not 4%, 5.52%. It is over 5.5% for TROW, well above their 5-year average growth rate of
Nice.
3.6%.
Yeah, yeah, very rare breed right now to have an aristocrat at that level. We're not talking Leggett and Plot. We're talking, yeah, T row price here. And wow, almost 2% higher than that 5-year average is pretty amazing, guys. So to summarize, a 12 PE, 68% payout ratio, 36 years of growing dividends, probably lower in the future from a growth rate, 5.52%. But we said that there were the four horsemen, the four aristocrats here riding high right now. This one has to be on everybody's watch list. If it's not, get
It's
it on there.
Archer Daniels Midland, ticker symbol ADM. It is wild what's going on there. They are now down 21.87% year to date. They are now down 26% over the last year for Archer Daniels Midland. The beauty of Archer Daniels, though, they are the quiet company that is heavily ingrained in all of our lives. With all the processing, all the corn syrup, all the products that go into our food, Archer Daniels crushes that. So even though consumers may be slowing down on the food end on that side, you still need it for everyday products and everyday consumption. That is why we freaking love Archer Daniels Midland.
And again, they're almost a dividend king, as we'll get into here, guys, but trading at $70.04. Analysts are expecting $7.20 in earnings. That's a PE ratio of 9.73,
Oh,
below 10.
10.
So,
It's enough said. It's a single digit PE ratio for Archer Daniels Midland. Enough said. It's like the Vince Carter. It's like it's over. It's over. Get that out there. All right, their payout ratio. Let's take a look at it. Annual dividend is $1.80%. I laugh when I'm saying this. I can barely make it through this. Payout ratio is only 25%. So let's do our favorite shock landing here. If earnings are cut in half, the payout ratio is still perfect at 50% for them.
guys, just remember that what Bert said right there is if earnings expected are literally half of what they are,
Yeah.
they're still a perfect payout ratio and they can
Yeah.
still increase dividends double digits if they wanted to.
Yeah. So let's talk about growth then. Their 5-year dividend growth rate is 5.77%. They are, as you said, they're almost a dividend king. They've increased that dividend for 48 consecutive years. Oh, so sweet. Tell us about that yield, Lanny.
Oh man, so the yield, it finally hit above 2.5%, guys. They're at 2.57%. Now I know that's half of what the 1-year treasury is. I can get higher than a high on yield online savings account. But guys, that dividend growth, that last one, we do have to make a mention about the last increase that Archer Daniels had, which they went from 40 cents to 45 cents. So that was a 12.5% increase, which was more than double what their 5-year average growth rate is. So we also expect some higher growth going into 2024 as well from Archer Daniels on the dividend front, probably somewhere north of 7.5% up to probably 13% in that range.
They have the room to do it. That's the thing. They have more than enough room to keep those strong dividend growth going.
But 4 basis points higher than that 5-year yield of 2.53%. So not the highest yielding aristocrat on the list today, but still worthy of some attention here.
Yeah. So let's summarize their PEs. 9.73, payout 25%, 5-year dividend growth rate's almost 6%. They're almost a dividend king with 48 consecutive years and a yield of 2.57%. Lanny, put the chart up of all four of them here. Let's get this going. What are your thoughts on these four? How many are you buying, and what are you going to be doing over the next few weeks here?
Well, watching J&J now that I grabbed a share where they're kind of at, I'll probably look at them closer to the 140 to 142 range. Target, looking at them probably closer to the $100 range. T Rowe Price, 85 range. Archer, man, I have a love hate right now. $70 seems so right, but I'm gonna say like 67.50. Give me a little bit of a 5%
I,
compression.
I love it, and I agree. I'm still scooping up T-Row at this price because we're going to build the price, but I think I'm gonna have to take a look at these, obviously watching them all, but it might be time to do a video similar to what you did. I think it was like 3 or 4 weeks ago, where you talked about selling some stocks you don't want and then possibly moving them and building up my positions here into T. Rowe Price or Johnson and Johnson or Target or Archer Daniels. Might be time to consolidate into some high quality aristocrats and kings, especially the 4 featured here on this video.
Wow. So getting rid of some junk, adding it to some possible quality, some companies that have been through it all that increase dividends no matter what, guys. There was the 4 dividend aristocrat stocks. Which ones are you buying? What are your favorite stocks to buy right now? What discounts are you seeing? Do you like these aristocrat stocks? Let us know in the comments below, as well as how many you own, guys.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Laney, what do we have to tell all these people out there?
Guys, you're either with us or you're against us. Jack, that was Bert the Hurt and Lanny from the Dividend Diplomats, over and out.